Hey everyone, and happy Mortgage Tip Tuesday. You know it's my favorite day of the week because it's the day I get to share with you. It's your girl, hashtag who? JLoan in the building. I know my neighbors always think I'm crazy on Tuesdays because I get so excited and I know they can hear me down the hallway, but who cares? It's Mortgage Tip Tuesday. So I wanted to talk to you a little bit about the market. I know you keep hearing about rates and this and that, but I wanted to do my topic today on reasons to do a cash out, okay? And we'll talk a little bit about that. But the biggest thing right now is that inventory today would be like on Easter Sunday having 10 kids and one egg and telling them to fight over that one egg, okay? And just to put numbers to this, inventory right now, per statistics found online, there's a roughly on the market, there's about 271,000 homes that are for sale. And to put this in perspective, in 2020, there were 750,000 homes for sale on the market. Okay, so if that put things in perspective, there's just not a ton of inventory out there. And then when there is inventory, you are one of many people who are fighting for that property. And of the inventory today, it's down 13% from last year and down 63% from the year before. And so we are in a difficult time when it comes to inventory. So the reason I want to talk about cash outs is because I think it's very important, and I've said it over and over again. What we do know that is true is that if you put your home on the market, due to not having enough inventory, your home is going to sell. But what we cannot guarantee you, or what no one can guarantee you, is that you are going to be able to move your family in a timely fashion and put them in another home in the same amount of speed that you sold your home at, okay? And then if you decide to go new build, right now, they're even behind, and customers are having to put their names in a lottery 4 months from now to even see if they'll get the lot. And then with the supply chain having an issue, homes that were being built in 6 months are now taking 12 months. So you have a lot to think about here. Yes, we need your home. So if you want to sell it, you can do that, but you got to have a plan. You have to have a plan in place because it may not go exactly how you want it to do. And you have to be prepared that if it doesn't, what are you going to do with your family? Do you want to move twice? Things of that sort. So let's get into today's topic, which is reasons that you should refinance. Okay. Now it isn't all about housing, but we'll get to that. Okay. So number one is that you can consolidate debt. Okay. And there are pros and cons to everything. So I'm only going to talk a little bit about consolidating debt. And this is high interest debt. So if you have multiple credit cards at 18 to 25% interest rate, you know that if you're only making the minimum payment on those cards, you will never pay that card off. It just will never happen. That's how they keep you in debt. And I could do a whole video on how to help you pay off your debt, or I've already done one, or you can call me and I can tell you the secret to doing that. But one good way that you can do it is you can consolidate all of your debt into what they say are higher interest rates now, which interest rates are higher than we've had in the past 2 years, but that they're not the highest that we've ever had in the mortgage industry. In fact, when I got in the business, rates were 6.5% to 8%. So we are still lower than what rates were when I got in this business 16 years ago. And when I got in this business 16 years ago, we were refinancing clients that had 13 to 18% interest rates. So please don't always listen to what you see on the TV, and don't always believe what you read, because there are several people that can consolidate debt and save tons of hundreds to thousands of dollars every month in consolidating that debt. The trick to this is that you don't want to consolidate your debt and then run that debt back up, because that doesn't help why you consolidate it. But I won't get into that, okay? So number 2, you can do home repairs. And we're talking about, I've lived in my home for 13 years now. We are right at the point of remodeling our home because it's that time. Whether we've looked at it for the whole time or things start to, it's like a car, right? No matter how much you fix it, at some point, you got to change some things. You got to repair some things on that car, where your house is the same way. And instead of maybe incurring new debt or doing a personal loan that may be a shorter term, higher payment, you can finance with that equity your home repairs. So number 3, college funding. All right, so everyone's getting ready to graduate soon here in high school or are going to go to college, and we all know either you're going to get student loans or scholarship, or your parents are going to pay it for you. So college debt, these are top reasons why people refinance. Number 4, home upgrades. What I was just talking about with my own personal home is that home upgrades need to be done. If you've lived in your home for a very, very long time, it starts to get wear and tear. And we're at that point now, and home upgrades are very important. We're talking about adding square footage, maybe adding, not us personally, but you can add square footage. You can build another garage. You can do a man cave or a she shed. These are all reasons that you can use the equity in your home. Then you have number 5, which would work really good in this market, which is to buy a new home or to help you buy an investment property. Now, cash is king in our market. That doesn't mean that people don't get offers accepted if they only have cash, because obviously I do mortgages, and mortgage loan officers are busy in the market. So cash is just a way to really sometimes make your offer stand out. So if you have the equity in your home and you are looking, you can actually use that equity, buy the home cash, and then turn around and sell your home. Of course, you have to qualify for 2 mortgages because you'll have one, and then you're getting another one. So again, I'm not going to go into the pros and cons of each. I'm just going to tell you reasons why you could use the equity in your home to help you in a market like today. And then you have, of course, your investment properties. So, of course, if you want to buy another home but you don't have cash on hand, you can use the equity from your home to help you purchase another home by doing a cash out refinance. We give you the cash, you turn around and you put that money down for your new property. And then, of course, emergency expenses, which can be anything from major medical, no one plans to get hurt, sick, injured. No one plans for that. And sometimes medical bills can rack up. We all know cancer can bankrupt a family in a matter of months, and it doesn't take a long time. So if you have the equity in your home, obviously you can use that equity to help you through those rough times. Now, these are just a few reasons that you can use the cash out in the equity of your home to help you in this market. But most importantly, fighting in this market may not be good for you. It may not be good for your family. So you can cash out, you can upgrade your home, you can make that home like the new home that you want by using the equity in your home. And that's the reason for me bringing this information to you, because there's just not one reason. Any of these reasons may fit you or your story or what you need to be done in your life. And the last thing I'm going to talk about is because I get the phone call, should I cash out? What should I do? And I have a lot of people that I have helped refinance in the past 3 years who have super, super low interest rates. That to me, even if I did consolidation, anything of that sort, it did not make sense. I'm not going to just refinance you because I want a loan in my name and a closing. I'm not going to do that. I'm going to look at your whole scenario. We are going to talk about it. But in our world, you have our cash out refinance, where we'll take your whole mortgage you currently have, we will refinance it, and then we give you a lump sum of money when your loan funds. That is a one-time transaction, new interest rate, first mortgage, one payment. But there are other cash out options, and those are called your second lien mortgages, which you can do a home improvement loan. You can also do a home equity line of credit. And to talk about the differences of two, one is just done for home improvement, and it's a fixed rate, but it is a second lien, which means you will pay your first mortgage payment and you'll have a second mortgage payment. It is for a certain amount of term. You can pay it off whenever you want. Then there's a home equity line of credit. This is like having a credit card on your home where you can draw from that line of credit whenever you need it, and you can pay it back as well. Typically, they give you a 10-year draw period where you can draw from it from 10 years. You pay interest only if you choose, and then you'll begin your payback period after those 10 years. The biggest thing about home equity line of credits is the interest rates are variable. And if they're variable, that may make you nervous. Not only is it a second mortgage, but the rate is not stable, it's variable. If your plan is to hurry and pay that money back, then this may be a better option, because if you have a 2.5% interest rate on your first, and interest rates per Mortgage News Daily, or you can look online, I'm not stating rates, you're above 5% today on a 30-year refinance, and cash out rates are even higher because of the fact that you have that cash out hit. So we have to look at the whole scenario, and sometimes it doesn't make sense for me to take your wonderful mortgage that I've already done for you and refinance that into a higher interest rate. Sometimes it does, but you need to talk with a professional so that we can weigh the pros and cons of your specific scenario, your specific story. I hope that this information is very helpful if you are in the, on the midst of should I sell, because you can sell and you probably can make a ton of money, but unless you want to live in an RV or Airbnb, which may end up happening, and it has happened to some of my clients where they sold and they had nowhere to go and ended up renting. And rent prices are also inflated. And so we don't want you to move backwards, and this is where the market is today. No one's going to stop buying or stop refinancing because rates are slightly higher than we've seen them. But again, if I can encourage you, I've been here before. Rates were higher when I started, and if the situation fits you and it makes sense, don't let what you hear or read or see scare you off that you don't even take the leap to find the information. It's your girl JLoan, as always. I hope this was helpful. If you like it, click like, comment, and of course share. You're not the only one I want to see this information. I want your friends, your family, your business partners, anyone to see this. If I can help you, as always, I'm an open book. 817-601-5456. Until next week, stay safe, be blessed, and have a great rest of your week. Bye bye.